How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be taking a look at a recent report from the OCC about mortgage metrics from the fourth quarter of 2024. So we're going to jump right into this. I want to start off by taking a look at the press release. So we're going to look at the press release real quick. Then we're going to go into the actual report itself. I will let everybody know that there are links to both the press release and the report in the description down below if you would like to go check them out. But let's dive in here to the press release here. So this OCC reports mortgage performance for the fourth quarter of 2024. So the Office of the Comptroller of the Currency, or the OCC, reported on the performance of first-lien mortgages in the federal banking system during the fourth quarter of 2024. The OCC Mortgage Metrics Report, fourth quarter of 2024, showed that 97.3% of mortgages included in the report were current and performing at the end of the quarter, an increase from 97.2% 1 year earlier. The percentage of seriously delinquent mortgages, mortgages that are 60 or more days past due, and all mortgages held by bankrupt borrowers whose payments are 30 days or more past due, decreased from the fourth quarter of 2023. Servicers initiated 6,647 new foreclosures in the fourth quarter of 2024, showing a decrease from the previous quarter and a decrease from a year earlier. Servicers completed 7,332 modifications during the fourth quarter of 2024, a 1.6% decrease from the previous quarter's 7,450 modifications. Of these 7,332 modifications, 6,872 or 93.7% were combination modifications, modifications that included multiple actions affecting the affordability and sustainability of the loan, such as interest rate reduction and a term extension. The first lien mortgages included in the OCC's quarterly report comprised 20.2% of all residential mortgage debt outstanding in the United States, or approximately 11.1 million loans totaling 2.7 trillion in principal balances. This report provides information on mortgage performance through December 31st, 2024, and is available on the OCC's website. So that is the press release, and here is the actual report itself. Everybody can see from here is the OCC Mortgage Metrics Report. This is approximately like a 14-page report, not very long. We see here a table of contents about mortgage metrics, executive summary on a number of items. Then a number of tables, number of mortgage modification actions, number of modifications actions and combination actions, changes in monthly principal and interest payment by state, and the number of redefaults or loans modified 6 months previously. So about the mortgage metrics. So the OCC collects data on first lien residential mortgage loans serviced by 7 national banks with large mortgage servicing portfolios. The OCC Mortgage Metrics Report is published quarterly to promote broader understanding of mortgage portfolio performance and modification activity in the federal banking system, support supervision of regulated institutions, and fulfill Section 104 of the Helping Families Save Their Homes Act of 2009. This report represents performance data for the fourth quarter of 2024 for loans that the reporting banks own or service for others as a fee-based business. The data in this report reflects a portion of first lien residential mortgages in the country. The characteristics of the loan included here may differ from the overall population. The loans included are not a statistically representative random sample. So that's a little bit of statistics jargon there for you, basically saying that this should not be, this is like a sample size, but this sample is not big enough to be representative of the entire country as a whole. It's just to basically try to give you an idea as to what is going on. This report covers the performance of first lien home mortgages in the portfolios of reporting banks. It excludes junior liens, home equity lines of credit, and home equity conversion mortgages, reverse mortgages, basically. For loans and forbearance activity covered by the Coronavirus Aid, Relief, and Economic Securities, the CARES Act, reporting banks are following guidance from the Department of Housing and Urban Development, Federal Housing Finance Agency, and the respective government agencies and government-sponsored enterprises for the calculation and reporting of delinquency and credit bureau reporting. So executive summary. So again, overall mortgage portfolio and performance. So we see here that as of December 31st, 2024, the reporting banks serviced approximately 11.1 million first lien residential mortgage loans with 2.7 trillion in unpaid principal balances. This 2.7 trillion was 22.2% of all residential mortgage debt outstanding in the United States. Overall mortgage performance this quarter improved from the fourth quarter of 2023. The percentage of mortgages that were current and performing at the end of the fourth quarter of 2024 was 97.3%, compared with 97.2% at the end of the fourth quarter of 2023. The CARES Act, which was signed into law on March 27, 2020, and ended on May 11, 2023, allowed for loan forbearance that could extend up to November 30th of 2023 and is reflected in the mortgage performance data. Servicers initiated 6,647 new foreclosures in the fourth quarter of 2024, a decrease from a year earlier. And then it gets into like numbers and types of modifications completed and impact on payment amounts. And again here, and then we get into some of the figures here. So the modified loan performance. So you can see here, since the fourth quarter of 2023, for the last 4 quarters here, we have been trending downward, but still maintaining a pretty decent area of 2,700 plus. Mortgage. What is that? Modified loan performance. So total serviced mortgage portfolio, number of loans in thousands. So we can see here over the last 4 quarters, the number of loans has been going down, approaching a little over 11,000 from a high of about 12,045 back in the fourth quarter of 2022. Figure number 3 here is composition, loans in thousands by borrower risk category. So we have other, so the little ones at the top are basically other, subprime, and alt A, but we can see prime loan in the blue makes up the vast majority of these loans. Other, subprime, and alt A are a very small percentage, which is very good to see, because you look at the numbers from the Great Recession, 07, 08, 09, and these numbers were vastly different. Figure number 4 is composition percentage of mortgages by borrower risk category. Again, prime, alt A, subprime, and other. And you can see again, 95% is prime. Alt A is just 1%. Subprime looks like about 2%, and then other is just 2%. So, and then figure 5, number of loans in delinquency and foreclosure in process, loans in thousands. We can see this again trending downwards just a little bit, so slightly. Figure 6, percentage of loans current and performing and in delinquency. So we could see, again, foreclosure process, seriously delinquent and 30 to 59 days delinquent at the very top in these little color bands here. Very, very small percentage. In the fourth quarter of 2024, foreclosures in process was 0.2%, 0.2%. Seriously delinquent was 1.1%. 30 to 59 days was 1.3%. And then basically your current and performing loans, 97.3%. So that's really solid. That's really good. Nothing really wrong there. Figure 7, newly initiated foreclosures. You see a little bit of a tick up here over the last couple quarters, but still, down from the fourth quarter of 2023, which is good. And then overall, the trend is a downward sloping trend here. Figure 8, completed foreclosures and other forfeiture activities. You can see here again over the last couple of years trending downwards. And then it gets into like kind of mortgages by state there. So, but that is the OCC report there on mortgage metrics. You can see for the fourth quarter of 2024. So we can see that right now, basically mortgages performing very well at the moment. No real major issues here, which is great to see. And, that's it. I'll keep, like I said, this is a report that's put out quarterly, and I always like to look at this just to get an idea of kind of what's going on in the mortgage market, just a little bit more good details for us out there, good data for you, I should say. But with that, I will wrap up by saying, if you like this episode, please make sure to like, share, and subscribe, as it helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And make sure to check out some of the other content on the channel. But thanks so much for watching, and I'll see everyone again real soon. Take care.